Well, Indian IT companies' shares dropped 7 to 8% on Anthropic's new AI-based software launch, a looming threat to service-focused jobs at Indian IT companies. Basically, unlike basic chatbots, Claude, that agent can independently execute 10-step business projects, threatening the very core of the $283 billion outsourcing industry. Anthropic has released 11 new plugins that give this AI specialized skills in legal, finance, and sales. So it can now read complex contracts, it can manage company files and build financial models on its own. It's essentially doing the work of high-paid professionals for a fraction of the cost. Investors are spooked because these plugins automate the high-volume, repetitive tasks that Indian firms currently charge for by the hour. So all 10 nifty IT stocks ended in the red, with Infosys and TCS leading the crash. The numbers are chilling, because TCS derives 66% of its revenue from traditional services that this AI is designed to replace. So as software begins to act as the worker, the billion-dollar question remains: can a human-led delivery model survive an autonomous AI era?
Overall, IT space has been in focus over last 1 year. If you look at the overall journey, the first we had the H-1B visa, the increased fees impact on the margins. Then we did see the overall US trade deal, which left the overall IT order book overhang given that late client conversion. And now we have this new Anthropic AI tool. Now, what exactly is Anthropic AI? Well, the company released an AI tool that automates a lot of traditional IT services for the clients. Now, why this is impacting a lot of stocks and why the global IT stocks are tanking in trade, and how will this have an impact on Indian IT? Let's quickly hear it out. Firstly, the overall Indian IT is dependent on the traditional service, and traditional service roughly forms 60 to 70% of the top line. While traditional service is like a cash cow for the company, given the company has a long-term contracts with the client, and further its clients have an high ROCE. But given the introduction of the new agentic tool by Anthropic AI, a lot of these activities can be automated by the clients itself, and they might now be order renewal for the IT companies going forward. Now, something like in TCS has roughly 66% of the top line coming from the legacy service, the traditional service. Now, if you look at the rest, 33% comes from new age AI services. Now, AI services is something where the companies of Indian ITs are investing over last few years and trying to see the return. TCS and HCL Tech are the only two companies so far which have reported a revenue coming from the AI sources. But rest companies remains focused to convert the overall top line into AI-based revenue as well. Now, given this introduction of the Anthropic AI tool, it's something to watch out on this overall contract of this IT company's turn and shape going forward. Given the contracts are long-term in nature, we might not see immediate impact on the fundamentals, but over time it's something to watch out of how does the overall top line perform going forward. A bit about financials of the top Indian IT companies. They have been muted over last few quarters, and the growth in the top line has been between 1 to 2%. So it's something to watch out for how does the overall outlook by the management changes going forward in Q4 as well as FY27.